Good day, I'm Abalore. On today's episode, we'll be looking at further question on manufacturing accounts. So the solving of this question will enhance your further understanding of the topic manufacturing accounts. So without further ado, let's get down to business regarding doing justice to this question. So, excuse me, I have a question here which we are going to solve. So the question will be displayed on the board on the screen. Sorry, the question will be displayed on the screen for you all to see. So I read: Grape Enterprises makes fruit juice. The following information relates to the year ended 31st December 2009. Stock 1st January 2009. Raw materials 336,500. Work in progress 60,000. Finished goods 350,000. Purchases of raw materials 950,000. Sales 6 million. Office salaries 315,000. Carriage inwards 78,500. Royalties 450,000. Direct factory wages 925,000. Discount allowed 20,000. Indirect wages 225,000. Insurance of factory 250,000. General expenses 300,000. Depreciation of plants 310,000. Delivery van expenses 62,000. Office expenses 300,000. Advertisements 65,000. Stock 31st December 2009. So raw materials was given as 245,000. Work in progress 47,500. Then finished goods 285,000. So additional information: A. Finished goods are transferred to the trading session at cost plus profits. That profit is 10%. So we are going to apply 10% on the cost of production we've gotten. That's the factory cost of production. Then the addition of the two will give us the market value. Then B, half of general expenses relates to the factory. So general expenses, half of it, we are going to charge it to the factory overheads, and the remaining half of that will be charged to the profit and loss account. Then C now, one third of office expenses should be treated as factory cost. So one third, don't forget, one third plus two third, sorry, one third plus two third gives you one. So one third will be charged to factory, then two third will be charged to the profit and loss account as expenses. So you are required to prepare the manufacturing, trading, and profit and loss accounts for the year ended 31st December 2009. So let's do justice to the question. So let's start by solving that. So, um, so we have the name of the business is Grape, Grape Enterprises, Grape Enterprises, and the account we are asked to prepare is manufacturing, manufacturing, trading, profits, and loss accounts, loss accounts for the year ended 31st December. Okay, 31st December, 31st December, that's 2009. So this heading alone, like I will usually emphasize, it's enough to fetch you 1 or 2 marks. So it's advisable you put the heading in order, because you cannot be preparing an account for a business that doesn't have a name. So the name must be there, and the account you are asked to prepare. So make the heading uh, attractive by writing it this way. So let's begin. So the currencies was given in naira. So we have the naira sign. So let's begin. So we have opening stock, opening stock of raw materials, That's given as 336,500. Then we have purchases. Purchases of raw materials. So purchases of raw material was given as 950,000. Then we have to that carriage inwards. So carriage inwards, add carriage inwards. It's given in the question, carriage inwards. That's given as 78,500. Then we let's return outward if it is given in the question. So that's that was not given. So we have this to get our net purchases of raw materials. So net purchases of raw materials. So let's add the two now. So 950,000 plus 78,500. So we have 1,028,500. Then we have the two together plus 336,500. So we have 1,365,000. So we call this cost. Cost of raw materials. Cost of raw materials available for use. Then we less closing stock of raw materials. Closing stock of raw materials. That is usually given towards the end of the question. So closing stock of raw materials is given as 245,000. Then we less that. So minus 245,000. So that gives us 1,120,000. So we call this cost. Cost of raw materials. Cost of raw materials consumed. Cost of raw materials consumed. Then we had any direct costs. So this cost of raw materials consumed to be able to get our prime cost. So we have add. So let's see the direct costs in the question. So we have royalty. Royalty is one of the direct costs. So royalties is given as 450,000. Then we have direct factory wages. Direct factory wages. Direct factory wages. That is given as 925,000. Then we have indirect wages. That will be charged to factory overheads. Then there are no other direct costs. So these are the two direct costs we have. So we are going to add it to this cost of raw material consumed to get our prime cost. So prime costs. Prime costs. Prime costs. So we have 1,120,000 plus 450,000 plus 925,000. So we have 2,495,000. So this is basically our prime cost. So having gotten our prime cost, we are going to add factory overhead. So factory overheads. Factory overheads. Factory overheads. So factory overheads, let's go now. So we're given, okay, we're given indirect wages. So indirect wages is costs that are incurred in the factory. Let's put it that way. Costs that are incurred in the factory. So any indirect costs. Don't forget, we did say overheads is the same thing as indirect costs. So wages that has been given there as indirect is factory overhead, is indirect cost. So overheads are indirect cost. So we have uh indirect indirect wages. So indirect wages is given as 225,000. 225,000. Then we also have insurance of factory. That's factory insurance. So insurance of factory is also factory overhead. Is also a component of factory overhead. So that's given as 250,000. So let's check for other factory overheads. So depreciation of plants. Why are we bringing depreciation of plants under factory overheads? Because plants, machines is used in the factory. So any depreciation on any asset that is used in the factory, you bring it under factory overhead. So we have depreciation on plants. So anything depreciation on plants to be charged under factory overheads, and that's given as 310,000. So if there is anything like repairs on plants, it will be brought under the factory overheads. Then if we check the additional information, that's additional information B. Half of general expenses relates to the factory. So general expenses, half of it will be charged to the factory overheads. That's what that means. And general expenses is given as 300,000. So half of that 300,000, which is 150, will be charged to the factory overhead. So we have general general expenses. General expenses. So half of it, that's 1/2 times 300,000. So that gives us 150,000. 150,000. Then we have the C part of the additional information. 1/3 of office expenses should be treated as factory costs. So office expenses is given as I think let me check that. Office expenses is given at 300. So 1/3 of it. So we have here. So office expenses. So 1/3, that's 1/3 times 300,000. So that gives us 100,000 by my calculation. That's 300 divided by 3. That gives 300,000. So let's check for any other factory expenses. So I think that's with respect to factory overheads, no other factory overheads here. So in the absence of none, so we had all this. So let's add everything. So we have 225,000 plus 250,000. Okay, 225,000 plus 250,000 plus 310,000. Okay, 310,000 plus 150,000 plus 100,000. So that gives us 1,035,000. 1,035,000. So we are going to add the factory overheads, the total of it with the prime cost. Then that will give us gross cost of production. Then we will add our opening work in progress and less our opening work in progress. So the two columns are here. So the addition of these two gives us 3,530,000. So that's gross costs of production. This should have been our cost of production, but we did say in a manufacturing concern, there are always, or they are usually work in progress. That's at opening and at closing. So we had opening work in progress and less closing work in progress. So the opening work in progress is given as uh 60,000. So had opening work in progress. Opening work in progress, that's 60,000. So we add it. So plus 60,000. So that's 3,590,000. Then we less closing work in progress. And that's towards the end of the question. We have it to be 47,500. Then we have our factory costs of production, or you can also call it production costs. The same thing, production costs. So that's given as minus 47,500. That gives us 3,542,500. So now, if we check the additional information one, we were told that finished goods are transferred to the trading session at cost plus 10%. That 10% is the profit. And that profit will be charged on this cost of production. So 10% of this will form our profits on manufacturing. So let's calculate 10% of this, which will be our profits. Then profits that you have gotten here plus your cost of production, which is factory cost of production, that will give us the market value. So we have profits on manufacturing, profit on manufacturing, that's 10% of production costs, 10% of this. So times 10 divided by 100. So that gives us 35,000. Okay, 354,250. And don't forget, if you had your cost plus your profits, that gives you selling price or market value, the same thing. So we add plus 3,542,500. So that gives us 3,896,750. So this is our market value, which will be transferred to the trading accounts. Market value. If we had not been asked to determine the market value, don't forget your cost of production will form the purchases figure. But now that we have determined the market value will form the purchases in the trading accounts. So this is where manufacturing account stops, to determine the cost of production or the market value. So let's start with our trading accounts now. So we have sales. So sales is given as 6 million. That's 6 million. 6 million. Then if there is any return inwards, you less it. But in this question, we're not given return inwards. So we less cost of sales. Cost of sales. The cost of sales, we have our opening. So here, opening stock of finished goods. So we are going to be concentrating on finished goods in this trading accounts. So manufacturing account is about incurring costs. Trading account is about getting the amount that we are going to sell the goods which you have produced. So opening stock of finished goods, at the beginning of the question, we have something around 350,000. 350,000. Then we had market value, which will represent our purchases figure. So that's given as this. So we are going to use this, not this. I hope that is understood. So 3,896,750. So if there is any additional finished goods purchase, you are going to add it to this two. You had it, you put it here, you had it. But there is no additional finished goods purchase. So you have this two added. So plus 350,000. So that gives us 4,246,750. So this is cost of finished goods. Finished goods available for sale. So finished goods are for sale. So cost of finished goods available for sale. Then we less our closing stock. Less closing stock of finished goods. Finished goods. So closing stock of finished goods. Towards the end of the question, we have 285,000. This is what we have. So we less it minus 285,000. So we have 3 million. So this represents our costs of finished goods. Finished goods sold. Cost of finished goods sold. That's 3,961,750. So we are going to less it. Then when we less it, we get our gross profits. So gross profits on finished goods. Gross profit on finished goods. So sales minus cost of finished goods sold. That will give us gross profits. So 6 million minus 3,961,000. That gives us 2,038,250. So that's basically what we have as our gross profits. So this is where trading account stops. Trading account is prepared to determine gross profit, and gross profit is gotten by sales minus cost of finished goods sold, or cost of sales. So we want to prepare our profit and loss account now. So to get that, the reason for preparing profit and loss account is to get our net profits. And net profit is gross profits plus other incomes minus expenses or less expenses. So here now, we have two profits. We have first profit on manufacturing, another profit on finished goods. So we are going to bring, don't forget, you are going to bring this profit on manufacturing. You are going to add it to this profit on finished goods. So this is the profit for manufacturing the goods in our factory. And this is the profit we made for selling the goods we have manufactured. This. So the two profits now will be added together. That will be the total profits we made from manufacturing and for selling the finished goods, or the goods we have produced, basically. So we're gonna be having profits on manufacturing. So profit on manufacturing is 354,250. Then when we add the two, so if there is any other incomes like discounts received, commission received, interest received, rent received, decrease in provision, and all that, you are going to add it before you close it. You are going to add it to all this, to these two. But in the absence of none, there is no income here, no other income. So we have just these two. So let's add it to. So 2,038,250 plus 354,250. So we have 2,392,500. So this is basically what we have. So this is a total incomes. Total incomes. Then we less our expenses now. So less. Okay, let me continue from here. So I hope you all can see this, right? So I need to rub up this part in order for me to be able to do the concluding part of this. So excuse me. I hope you all can see this. Okay, good. So Let me so let me bring this income here. So we have the income as the two columns. So the total income is 2,392,500. Then we less expenses. So you can put all the expenses together. So let's begin with those expenses we have in the question. So we have office salaries. So office salaries, no treatment on that. So we are going to bring that here. Don't think there is any. Okay, there is no adjustment on that. So we just bring it here. So office salaries was given as 315,000. Then we also have discounts allowed is also an expenses. So discounts allowed is given as 20,000. Then indirect wages we have uh, treated that's factory overheads. Then general expenses. General expenses, do not forget, we were given additional information. B, half of general expenses relates to factory. So we have charged half of that general expenses to factory overhead, which is 150. So the remaining 150 of that 300,000 will be charged as profit and loss account. That's expenses. We charge profit and loss account. So we have expenses, general expenses. So the remaining half now, you are going to have 1 over 2 times 300,000. So that gives you 150,000. So I hope that is understood. Good. Then delivery van expenses is also going to be charging. Delivery van expenses. And that was given as 62,000. 62,000. Then we have office expenses. Office expenses, we were also told that one third of office expense should be treated as factory costs. So we have charged one third, which is 100,000 to the factory overheads. Then the remaining two third, which I explained earlier. So two third, that's 2 over 3 times 300,000, and that's going to give you 200,000. So 3 here 1, 3 1, 100 times 2. That gives you 200,000. So office expenses now. So office expenses. So you are going to have two third. So one third plus two third gives you 100 or 1. So times 300,000. So you're going to have 200. Then we have advertisement. Advertisement is also charged to profit and loss accounts. Advertisement. Advertisement, no treatment on that. So that's 245,000. 245,000. So there is no other expenses are left. So this is the total expenses we have. So let's add everything. So we have 315,000 plus 20,000 plus 150,000 plus 62,000 plus 200,000 plus 245,000. So that gives us 992,000. So this is the total expenses. Then we less it. So that gives us our net profit. So it's net profit because the total income is greater than the total expenses. So this total income minus total expenses gives us net profit. So we have 2 million. So that's 1,400,500. So these are net profits. So our net profit is 1,400,000 400,500. So the business is making a profit, which is good for a business, right? And at the same time, it could also have a loss. But with respect to this question, it's profit. The business is making a profit. So there is more of a detailed question on manufacturing accounts in addition to the first question we have solved. So with this, you should be able to at least attempt any question on manufacturing accounts if you come across any one. So this is where we are going to be drawing the curtain for today. Continue to support us. Subscribe to our YouTube channel. Ring the notification bell so that you get notified each time we put out a video. Continue to help us to share our videos to friends and relatives and to every other person that this video might be of great help. So at this point, at this juncture, I would like to bid you all a farewell. I'll see you on my next video. Do have a good one. Bye bye.